Yes, hello everyone. Welcome to my second video on YouTube. So after the feedback of the last one, a lot of you guys, gave me feedback on both the YouTube comments and also on my Instagram DMs as well, just telling me, yeah, keep it up, keep it going. Obviously, there's a few things that you all highlighted, so like technical and fundamental analysis, but I'm gonna continue a bit on with the technical first for the next few videos, and then obviously get into fundamentals later on. But apart from that, guys, let's get straight into it. So what I want to look at in this video is pretty straightforward. There's the three main types of order blocks. So when it comes to smart money concepts or smart money tradings, whether it's supply and demand, whatever it may be, it's something that you can easily pick up on YouTube. But what you realize is when you are researching this, when it comes to order blocks, you start to realize that, it looks very straightforward in theory, but when you look on the charts, it's not always as clean as the nice order block that you want to see, that big up move before the down move. Now, for this video, I'm not going to get into the whole theory of order blocks. I'll leave that for another time. But for now, I just want to look at the three main types. So for a lot of this content, I'm going to take it from my actual course. So this is what I teach all of my students in my mentorship. This is one of the lessons that we have in the first part in the section of technicals. So yeah, let's get straight into it. So the first type, order block type 1 with entries. Now, just as a precursor to all of this, I want to quickly explain market structure in terms of retail logic and then smart money concepts logic. So what retail will have you thinking is when you're in a downtrend, what you want to be looking for is whether you're in uptrend or downtrend, it's support and resistance. However, when it comes to smart money concepts, what you're actually looking for is certain points of interest. And then within them points of interests, that's where you're going to find the order blocks. Now, these order blocks is what you want to be entering off. Your stop loss will be just above. However, if it's for retail, as you can see in my little diagram there, your stop loss is going to be much wider. It'll be above this whole area. Now, when it comes to order blocks, you can really refine your entry points. And essentially, you just get much higher risk to reward. And also, you start to understand market structure a lot better as well. So when it comes to the first one, we have the standard order block. Now, this is pretty much what you find across YouTube, internet, wherever you may look for smart money concepts. This is what you're going to be finding. If you're in a downtrend, it's the last up candle before the down move. Now, it doesn't really matter on the size of it or, the colors. You can keep everything in black if you wanted to, but it's pretty much the last up candle before the down move. So what this is essentially, just to quickly explain the whole theory behind it, is it's the manipulation before moving down. So in this example right here, there wasn't too much manipulation before moving down, but this was unmitigated before dropping further. So as you can see, as price moves further down and down, eventually gets to a point where, whether it's the time of the day, whether it's fundamentals, like a news event or something, it will just continue to keep on dropping and dropping. Now, eventually, price has to come up and fill the liquidity void below it to eventually mitigate this order block. Now, this is exactly what we see in this example here. Now, if you wanted to ask me, how do I actually profit off this? How do I enter this trade? This is what you would do. There's a few ways of entering, and I'm going to teach you how. The first way is to simply use the wicks. Now, I like to call this a wick entry, so it's entry type 1. Depending on how the market is moving, I will sort of determine whether I'm going to use entry type 1, 2, or 3. But pretty much this is the safest bet. It's where you enter just straight off the wick, so not the body. Of course, you're looking for it to touch the body, but sometimes it goes straight to the wick and just keeps dropping. Your stop loss is just above the wick as well, or you could say above the area or the point of interest, but usually just above the wick. Now, the second type is a body entry. This, at times, it doesn't happen. So at times, for example, you would see it would just go straight to the wick and then keep dropping. This one, of course, you're going to get high risk to reward because your stop loss is much tighter. Now, your third type is where your stop loss is literally touching your wick. Now, personally, this is the way that I always teach my students as well. This entry is obviously a lot more risky because if you do this type of entry, then you're more likely going to, hit stop loss. But it really depends on how you have refined your point of interest. Now, this is a topic that I want to go into much later on in my video series, but it comes to a certain point where once you refine to a very good point of interest, you can kind of take this type of approach where your risk to reward is very high because your stop loss is, it's minimal, as you see in this photo that I've got prepared. So very simple. This is the main type of order block. This is what you see across Instagram, YouTube, whatever it may be. It's pretty much what everyone learns, especially in the beginning. So moving on, order block type 2 with entries. Now, this one is slightly more complicated because when you do look on the charts, it might take a bit of time for you to adapt to it. But essentially, it's what I like to call the engulfed order block, because pretty much what happens is the last up move before the down move. So let's just say we're in a downtrend. It's the last up move before the down move. However, this order block has to be engulfed by the next one. So what that means, the whole body has to be covered by the next one, or at least in the down direction. So as you can see, let's look at example 1. In this example, we've got the standard order block, which is the gray box on the left or top left. That's what you could have entered on. Now, what we're looking at here is the engulfed order block. So it doesn't matter whether it's a buy candle or a sell candle, whether it's gray or black, whatever it may be. Our key takeaway here is that the whole candle must be engulfed by the next one. So let's look at what I highlighted in blue. So it's the last candle at the top, but then the next one is engulfed in red, as I've highlighted. Now let's look at example 2. This one could be looking at the wick as well, for example. So you've got that blue one that I've highlighted at the top, and then the next candle completely engulfs it downwards. So this is just another way of entering. What you're going to realize, and please guys, backtest this in your charts, you're going to see that it does work. It appears a lot of times, and this is where price rejects off pretty much. But you're going to realize when you have this type of entry, your entries are going to be a lot more refined than the standard order block. Let's see an example. Now, if we were looking at something like this, on the chart on the right, you're going to see, I'm just telling you, we're in an uptrend. We know that fundamentals are backing it as well, which is very important. Let's just say we have liquidity to the upside that we're aiming for. So that's the checklist pretty much already done for that part. Now, in terms of entry, we know we're looking for buys. So which area are we going to be looking for? Now, we could go for the order block, or you see this last blue candle in this last black candle before the up move. It's really massive. Could be 50 pips, could be 100 pips. Now, what I would say is usually I wouldn't enter off this because it's such a large area, and then the risk to reward, it might be just a 1-to-1 or 1-to-2, which is still good. But of course, we want to be able to refine our entries a bit more. That's exactly what we've done here. We looked for our engulfed candle. So for the one we entered off, the blue line, as you can see, the next candle after the lowest point, or the lowest candle, you can see that it completely engulfed it to the upside. So what did price do? Price came straight back down to our point of interest. So for our point of interest, what we would usually do is highlight the whole area. Then we look at our points of interest. This might be on a 15-minute or a 5-minute candle, whichever it may be. And then eventually we got to this entry. So what does the entry look like? A few ways of entering as well. Like last time, like in the last example that I was explaining, one way is just entering off the open of the body, as we've just done right there. And then the stop loss is past the wick. So as you can see, we got to a pretty nice risk to reward there. Then another way is entering off the wick. So what this would mean, this is another example. So if you had entered off the previous mitigation, this is exactly what it would have looked like. So this one, whereas this one is the open of the body, this one is the wick of the whole candle. Now, what I would suggest to you guys, and if you are taking notes, obviously take this into account, you would usually enter off this wick when the candle is very small, when the whole candle is small. So as you can see, this one is much wider. If we were entering off the wick, you know, it would be a much larger stop loss. But for this one right here, it's more minimal. Therefore, when you're entering off this, you're going to get a much nicer risk to reward. Now let's keep going. This is what the entry would look like. Now, guys, just in terms of everything that I'm presenting to you, of course, this is my presentations from all of my mentorship and everything like that. If you are interested in something like that, then most of the information is pretty much on my Diamond Capital Instagram. So if you want to look more into it, you know, I've got the Diamond Capital trading channel that's coming out soon. So it's going to be pretty much all the entries I'm taking, everything like that. This one obviously won't be for everyone that's looking for mentorship, but if you are looking for mentorship, then this is exactly, you know, I provide everything as a package. So you've got pretty much everything in the trading channel that I've just described. And then you've got the technical course, the fundamental course, and then everything else that comes with it. So if you've got any questions, obviously I'm going to be talking about it later on in the month, but for now, I'll just, you know, just keep that in mind. But yeah, let's look at the third type of order block with entries. So the third type is one that is pretty well known in the smart money concept sort of community. What I would say is the closest thing that I would see to support and resistance, but it's more pinpoint. So what it is, it's a previous order block that has broken through and we are now returning back to it. Usually it's most effective when price is moving very bullish or bearish with minimal pullbacks, i.e. not returning to premium and discount areas such as a standard order block. So just to not confuse you guys, what that pretty much means is when price does not return all the way back up to the premium areas. So if we were entering off pretty much this, what you would call the breaker block, you would expect that price, you know, is moving very bearish or very bullish, and it's not pulling back all the way to premium areas or discounted areas. So how do we enter off this? As you can see, it's the same logic. Breaker block, what I would say is through a liquidity void. So this is something that I'm going to explain in another video when I'm talking about liquidity voids or imbalances. But for this one, pretty much is this. We've got the sell side liquidity. Let me just annotate this if I can. So here, we've got sell side liquidity right there. We've got this imbalance all the way from here. Now, if we're looking at entries, this personally would be my favorite type of entry. But if I'm seeing that it's a certain type of day, let's just say it's New York and London crossover at this time, I'm expecting that price is eventually going to pull back to the upside. So we're only looking for buys at the moment. Now, because of the time, I'm expecting that we're going to pull back around now, where it's 1:30 or between 1:30 or 2:30, whatever time it may be. So I want to look for an entry around this time. And what do I have? I've got a breaker block right here, which is exactly what we went straight into. Now, like I said, you always want to pair this with a liquidity void. As I just explained, let me just clear that. The liquidity void was just between here. Now we want to look for an entry between there, and this is our breaker block right there. Okay. So onto entries. This is exactly how you would enter. Stop loss below the breaker block. If you really wanted to be conservative and take that type of approach, then you would put the stop loss much lower. Say, for example, down below the lowest point in this range. So yeah, pretty much breaker block paired with the standard order block. So this is another example that you could look at. Breaker block we can identify as being over here. So this one is the breaker block that we've identified. So this is the zone. Then when you look at the standard order block, this is the large order block that we're looking at. This one right here. So when you pair them two together, how does it look like for an entry? The entry would have looked exactly like this. Now, if you're looking at this example, what would have happened is I probably would have entered, I believe I actually took this trade because this is when I was looking at some of my previous trades. I took the trade right here. So this was the stop loss, the entry, take profit, above the highs, but then eventually price came back down here. Obviously, I took some partials at the top here where I've got some buy side liquidity. But yeah, eventually came down to break even. But yeah, guys, that's pretty much it. When you're actually looking on the charts as well, this really is going to make sense, especially when you're back testing. Let's just hop on the charts, look at some examples. So yeah, AUD CAD, let's see what we've been going on recently throughout this sort of autumn and winter time. So eventually for AUD CAD, this is exactly what happened. And guys, when it comes to these three types of order blocks, obviously it depends every time. I don't always enter off a breaker block. I don't always enter off engulfed candle or a standard order block, but it's kind of what I feel in the market and what presents itself the best. So when I was looking at this example right here, when I was trading, eventually we reached a higher time frame point of interest. At the time, I believe there was some news going on as well, which led me to believe that we were eventually going to start selling. So that's all I was looking for. We broke structure to the downside on multiple occasions, but let's just say this was our prominent break of structure down. That's exactly what we got. A buildup of liquidity to the downside over here. Then as price started to pull back, this is exactly what we were looking for. Price came back into our order block right here. Now, if you were entering off a standard order block, you would have been using that one. If you were entering off the engulfed order block, it's this one. So you see what I was saying, the engulfed one, the type 2 that we were looking at, always has to be engulfed by the next candle. And as you can see, the news event, was very aggressive. It led to this massive downside movement. Eventually, price came back all the way to our engulfed order block, and that's exactly why I entered off there. As I said in the previous examples, you could have entered a lot more risky, just leaving it just above the body. Personally, I left it above the wick and the whole area. I feel it's a much safer approach. And then in terms of take profits, of course, I could have, extended my take profit all the way down to, let's just say, to meet this liquidity void down here. But personally, I did see this as a point of interest down here. Because again, we've got to look at, the higher time frame. We are moving bullish, even though fundamentals are starting to suggest that we can be looking for some sell side movement. So we've got to prepare for, all circumstances. Eventually, price came down to our take profit. Let's look at the next example. This one was honestly planned as my favorite type of trade, where you've got liquidity or a build up right there. In this case, we had equal highs and eventually an unmitigated point of interest. Now here again, you can look at certain types. So if we were looking at the standard order block, I would personally look at this one right here, right there. If we were looking at the engulfed order block, would have been looking at this white one right here where it got engulfed. Now, just as a bit of an explanation to you guys why it wasn't this white one, because let me just draw on here. This white one right here, for us to say that it was engulfed, what it would mean is that the bottom or the bottom of the candle has to be taken out. Now, the bottom of the candle did not get taken out for quite a few hours. This is on the 1 hour time frame. It didn't get taken out for quite a few hours. Eventually, which one did get taken out? It was this one right here. Let me just get the horizontal line or the vertical line. That candle right there. Again, it wasn't this black one. It was this one right here, because the next candle was one that engulfed it completely. And that's exactly what I would have been looking at. However, when it came to price action, a bit unfortunate that it didn't pull back all the way to my point of interest. I did feel that price was eventually going to move back there because it was very perfect in terms of market structure and also timing of the day as well. I was expecting it to move there. But of course, price doesn't, always do what you want it to do. So we've got to adapt. Eventually, we're still looking for sells. So price moves down, breaks this structure right here. Eventually, as it moves down, Price creates the sell side liquidity that I mentioned in the last video. Have a look at that one if you haven't already. Then all we're looking for is certain points of interest. Now you have, for example, this one right here. Eventually, price, what happened? It moved right there. But personally, I believe this one was a Friday or something. So there was, big movements in the market, when it comes to 10 p.m. or whatever, then market open. It's a bit crazy. So I don't really want to be entering then. However, I waited a bit more till I got to this point of interest right here. Now, this one, again, you could look at the 3 different types. It could be the breaker block, which is this zone right here. This is considered a breaker block. Linking that up with there, extending that all the way. As you can see, price did not go straight into that area. But personally, I was looking at this area right here. The reason is because it was unmitigated. Now, I want to create a video on more order blocks and everything to do with it, whether something is mitigated or unmitigated. But this is something that you're going to have to understand which ones are, the more important order blocks that you want to be looking at. In this case, I entered off the engulfed order block because it was this white one. But in terms of the entry, it was off the wick. Stop loss just above the whole candle, so above the wick as well. Eventually, really nice entry. Price came straight down to this sell side liquidity here. And then moving on as well, this one I actually didn't take because I believe I had planned for it, but I just completely forgot about it. So, always set your limits, guys. It was a bit more risky because there was this liquidity just above it. But of course, price moved quite nicely, went straight into the point of interest. Again, you could look at a few different types. If you're looking at the standard order block, it would be this one right here, this white candle right here. Again, this is a very nice area because it's also linking up to your breaker blocks. You can consider this as this area. So guys, as you're listening to me, you can kind of see where we say breaker blocks is the closest thing that I've seen to support and resistance lines or support and resistance zones, because, you link it up to that kind of area previously. Then more recently, this month, I got into this AD CAD trade. I believe I took some partials here, eventually moving up to there. I had my first point of interest marked down here, but eventually price didn't get there. I'm hoping that price does get back down there, and then maybe, depending on fundamentals, we'll see after the new year what happens. But yeah, guys, that's pretty much it when it comes to these 3 main types of order blocks. So just to refresh your mind on all of these, let's go back. The third type is the breaker block. Second type is the engulfed order block. First type is a standard order block. So yeah, guys, any questions, just send any DMs on Instagram. This is where I'm mainly active in terms of interacting with you guys. Also, the YouTube comments are decent. When it comes to the mentorship or, the courses that I've got, or the trading channel that I'm going to be setting up real soon, all information on here. Any questions, just send them. But yeah, guys, any suggestions for the next few videos, obviously hit me up. I want to, keep interacting with you guys as much as possible. So yeah, anyways, take care, guys, and I'll see you in the next video.